All right, so it's uh, Friday, the 1st of October. This is Sydney time, right? So Asian close, Europe will be opening soon, probably just opened. US opened in a few hours. Here's the rundown markets today and this week. I'm actually away for the weekend. I've got gigs on, thank God. So I won't be doing another one until Monday. Before I do that, just a little bit about myself. I'm 50 something, 6 kids. I retired 10 years ago at the ripe old age of 42. I'd worked in investment banking for over 20 years, since 1989, mainly in financial markets, commodities, FX, rates, structured products, derivatives, complex derivatives. I've been in the markets and trading and investing since 1989. So I've seen a lot along the way. I'm not interested in selling a course. I'm not interested in getting a part of some chat room. Although feel free to contact me. Always up for a g'day. And I'm doing this because really I've seen there's a lot of people on YouTube doing market commentaries. The only one that I've seen which I would really lend credence to is this guy called Chris from FX Empire. I think he knows his stuff. He talks like a trader. When I say trader, right, I mean someone from the industry, not someone just punting around in their bedroom, right? So for me, I've seen a lot of interesting events and trade through a lot of events over the last 33, 4 years, whatever it is, I don't know. Including trading, running a complex options book when September 11th went down, running risk when WorldCom collapsed. That was a really big collapse at the time in 2002. The dot-com explosion, the GFC was running an emerging markets business. When the GFC went down and massive deleveraging, we were running a lot of emerging markets debt, corporate debt, had a large repo book, so financing over the debt. And in emerging markets, which is where I spent a fair bit of time, you see all the hairy stuff in its extreme. So that's my experience, right? So I guess that's what I bring to the table when I talk about these markets. I'm not a fan of CFDs and just intraday punting. I'm a bit more of a looking at the trading indices and currencies, the odd commodity. I've got a lot of option strategies that I do, but I haven't really talked about them here. So that's me in a nutshell. Look me up on LinkedIn if you want to know more. But as I said, I'm not some 20-something-year-old kid in a thing like that. The businesses I've ran for the bank, over the course of the years, it was like tens of millions, hundreds of millions of dollars in revenue. Profitable businesses, and by and large complex derivatives and structured products. So I guess some people might say I'm an industry insider, for want of a better term. That's a little bit about me. As I said, check me out on LinkedIn just so you know who you're listening to. This is for education. I'm not giving you financial advice. This is my trading diary. This is the way I look at the markets. This is what I've got on. If you're going to trade futures, frankly, you've got rocks in your head. Get a decent advisor. Get someone that's going to talk you out of it. Futures could be toxic. People lose their houses. Tread very carefully. So this is the S&P. These are some thoughts that have been with me for like a few weeks now. Obviously, that trading around the 17th and 18th trading days, calendar days. It's not options related. It's not economic data related. There was a big seller in the market, over the last 5 months. May, June, July, August, and of course September, where the two business days, like the 17th and 18th, or good business days around, they sold and they got the market, and the market recovered once the seller disappeared. And as I said, a couple of weeks ago, it was going to be interesting when it happened this time, which it did, because it would break this trend line and break these moving averages, and it would give the market something to think about, which it has. And my view was it was going to result in a correction, which so far it has. It is so far looking a bit more like the price action here, right, than the island reversals There was an island reversal here in play, but it's retraced. We are obviously looking at some technical damage that's taken place, this long-term trend, and lower lows. Right, you can see this 43.50 level, which is key, has been broken. We can see there's a moving average across. This is a simple moving average, like 20 and 50. That doesn't happen very often at all, right? Happened here, happened here, happened here. So it's happened like 4 times over the last 2 years. It's happened here. That's not an indicator of what's going to happen. It is an indication of what has happened, right? and it was up here, right? It was up here, actually, when I was saying that this is the top, watch out for the 17th and 18th. That's what happened. Here we are now. I'm not always right, but this time I like saying I told you so. I'll pick this one like a nose. It doesn't happen. Certainly doesn't happen all the time. There is a bit of jaws of death, the toot, the megaphone, or whatever you want to call it, that is coming here. These I've seen as a topping pattern. There was a great big one in the S&P, I think, if I recall correctly, around the .com meltdown. I'll look it up one day. And this one is looking particularly bearish. If we zoom in like a little bit closer, you can see how it's unfolding. This was the level that I had in mind. If it broke, then the bear story was over. It obviously hasn't broken. It broke down from around that point, and it is in the process of forming some lower lows here. Very critical. Had a bit of a sell-off just towards the end of the close there. It'll be key level today because it's the end of the week, and it will see what happens on the weeklies, right? But you can see that weekly candle there is looking very, very bearish, and the RSI has just turned over. That's the US market. I'm just going to have a quick look to see in the futures to see what we've got here, if anything. Yes, see, that is what's happened in the Asian time zone today. This is why you've got to watch the futures, right? It followed through, and it really did drop like a stone very quickly this morning, and it's just then plateaued out of there. It's a bit of a confirmation. In the futures, you can see there's this break here, the gap to be filled at 4,000. I think this is the first stop. I'd say there's a near 100% chance of it getting here. It's not that far away now, and an increasing chance of it getting to there. I trade futures largely from a bearish perspective, just because I've got a massive long portfolio. So this is the way I manage the downside risk on it. So I've got a bit of a bear bias in me, and the danger is always when you see this happening, you think it's going to follow through. That one is really an even chance of holding. I think there's a very high chance it's going to get there, even chance of holding. These corrections, it can be a correction like this, right? Instead of something down to that level, right? So you can see here, it had that correction to this previous high when it came down to and bounced off, and that really is that, that level there, right? So if it does what it does here, then really we're almost through, almost done with the correction. And that, of course, is the same as what we saw here, right? Where the correction came down to the previous high, had another go, right? Looked like it was going to go, but it didn't. And, of course, here it's come down. It's had a go here, had a bit of a go here, but it might bounce around here a little bit. That will be the test. That's the US market. In the Australian market's looking really quite sickly. It's come down to the pre-corona highs, and I guess in a way that's a similar pullback to where I'm expecting the US to go to very soon. Today I would put money on that. Well, I have put money on it. And then there for the bigger pullback. Similar thing, this trend line's kind of broken. It's unfolding lower. And when you look at the weekly, this is quite a good example of, I guess the reading into the candles. We had a break here, right? Quite a strong break down from a trend line. broke this support level there. This whole week of indecision is sort of like saying, right, so you thought it was going down. This one's saying, are you really sure? Are you sure? Right? Goes up and down, finishes where it opened. This one kind of says, look, we're still thinking about it, right? But we are thinking it's going down. And this one is, yeah, it's definitely going down. So it's sort of like, oh, look, we're bearish. Are you sure? Are you really sure? Yeah, we're definitely sure. And that's, of course, where it's taken it to. So I'm short the US market, short the Australian market as well. Let's have a quick look at the currency. The currency is doing a little bit of a same thing. It's had that same indecision, and to me it's doing a turn and go. Could do, right? Where this time it came back, had a bit of a turn, and then it went up. This one, it looks like it's failing this support level around. It's a little bit under, right? 73.30, 73.40. You can see how it's wedding caked on the way down. And this to me looks, it's broken this level, which is like a 72.30, 72.40. It's gonna turn, and I think there's a good chance it could break tonight. That's what I think it's going to do. It's had a few stabs at it, hasn't really followed through. The other thing I'm going to look at quickly is gold. Gold, I've gone short. It's a little bit, doesn't quite fit in really with my overall macro view, right? But in terms of inflation coming back, right? Because normally inflation is gold's friend, but certainly with the dollar weakening, dollar strengthening, that fits with gold coming off, which has kind of been the case. So I guess we've seen that in silver. Now, the thing that I'm seeing here, my first impressions, right, is what we've got here, right, bears a remarkable resemblance to what we've got here. Now, as I've said before, technical analysis, it's about pattern recognition in the vain hope, right, that these patterns will repeat. Sometimes they do, sometimes they don't, right? And when you look at this one, that's what it did. It had a little bit of jumping around a level, went up, legged its way down, had a last gasp, had a bit of a pause, you can see in there, and then it was over, right? That is really what's happened here. It's the same thing, right? It's had this little jumping around, little jumping around here at this level, which is basically where it is now, that 1750 level. Had a spike up, trend down, couple of legs down, bit of a rebound, like significant rebound, like a deep one. That's probably like 50%. I'd say that's probably like your 60%, fibbo. Let's have a look at that off the bat. Yeah, a bit deeper than 60%, right on it. So quite deep, 60 to 70. This one not quite as deep. Oh, actually it is. Yeah, so it's 60% rebound. Then it's tested the level. Now if it goes through, it's going to find really like a level, where it kind of broke out from, or where it can fill the gap. The other way that often these things break is the distance from the peak to the support level. It's like $320 is often where it comes back to, right? Which is roughly kind of where it, that's kind of middling that level where it came back to. So for here, if it did that same kind of movement, you can see that movement up. It's around about the same thing. It's like around about $300. It goes down. Where's it going to take it to? It's going to take it in here. Now the interesting thing about that level that I look at is when I look at the chart here, is there's a big gap to be filled, Now, that to me looks pretty magnetic, for a few reasons. One, this whole price action does look pretty bearish to me, right? Or at least there's a risk. And if it breaks down, then then where's the target, right? That is one indication, Right? Another indication is the gap. And another one is often when the price action breaks out, it returns to where that breakout point was, which is there. I mean, arguably that's kind of where it broke out from. I mean, you could say it's a bit higher, like this kind of range, but that is the sweet spot, and that's like that $1,400 to $1,500, so a couple of $100 on gold. I think that's not a bad thesis of where this thing is going to break out from, and that's if history is our guide, that's kind of where it could come to. So I won't go into the bonds today, but that's where I'm at with the markets, the currencies, and the commodities. Make sure you have a good weekend, and tonight I'd say is going to be pretty interesting. There's PCE data out. There's a couple of people speaking. There's a few things going on. And the way I see it, that weekly candle is extraordinarily bearish. Right? That's in the futures, and it's still trending down. You can see on the weekly here how it has, on the RSIs, it has absolutely dropped off a cliff. The last time it dropped off a cliff was like up here. Okay, so there's plenty of warning bells for me that say, first of all, that stop at 42.33 is near inevitable. This level here at 4,000, if it breaks this one, it's better than 50-50 chance, really. But of course, this is the precedent that I'll be very wary of. If it does, it's kind of had leg up, that, and it's off to the races again, and that could be here, right? And that's exactly what could be happening. We could just be seeing the first leg down of that leg down that we saw here. That might be where we are in the price action. It might have a good rebound, might test it again, and then it's off. Let's face it, the Fed is it's done everything they can to pull out the stops to help these markets on their way, and they're in a bit of a situation as far as how to delicately manage that situation. Well, I'm going to put some core levels in, have an early night. I'm not going to start and watch the markets tonight. I'm happy with my positions, and we'll catch you probably on Monday after my gigs. Okay, catch you later. Ciao.